as we talk about prices and as we have the drumbeat here to the opening bell, got to talk about CPI again, right? We saw that 0.5% increase in CPI month over month, which is a reacceleration from the 0.1% increase in December. Core CPI, ex-food and energy, up 0.4%, matching what we saw in December. So no slowdown in the increases in prices reported. And the year-over-year gain is 6.4% on a headline basis. There you have the opening bell on Wall Street. And the way that the street has been reading this, love that, black women on boards ringing the opening bell there at the New York Stock Exchange here in this Black History Month. And, the street is sort of trying to figure out what to make of these CPI numbers. Does it change what the Fed is going to be doing? Is it enough? The Fed has said pretty consistently that it watches the 3-month trend at least, if not the longer trend. So, well, you have
Jerome Powell, Fed chief, to thank for this. He's the one that got this whole train in motion regarding disinflation, and then his various folks on the Fed had to push back at this stuff. So I think he's just injected massive confusion into markets, Brad.
Yeah, well, taking a look at the confusion, at least out of the gate here on the day, let me populate this chart for us. Taking a look at the S&P 500, as of right now, we are lower by about 0.5% over the past 2 days, still holding on to some gains by about 0.6% here, but that drop at the open here reflected in this chart. You're also seeing the NASDAQ composite, that right now lower this morning, down by about 0.8% past 2 days, higher by 0.7%, and the Dow Jones Industrial Average, that is rounding out the downward trifecta, if you will. We are lower by about 0.5% for the Dow 30 components there, and still holding on to gains of about 0.7%, we'll call that, over the past 2 days here. Also want to take a look at some of the sector activity out of the gate this morning. We've got the 11 S&P 500 sectors loaded up on the screen for you right there. There's a lot of red there, so we're going to move quickly and expeditiously through this. But bringing up the caboose, we've got consumer discretionary. Some of those elements of where consumers perhaps are pushing back on price or just saying we don't really need to buy. That really rounded out in that decline there. And, of course, that continued movement that we've been tracking over the course of, let's put this on a year-to-date chart, perhaps even. There's been a little bit of a rebound in consumer discretionary. But then even as you think about the broader picture there, past year, 52 weeks, there is still a lot of ground to be recovered there. So we'll keep a close eye on that, especially in light of some retail sales data and then, of course, the consumer price index data that came out this morning.
Yeah, and one more thing to mention about the consumer price data and how things have been moving in the wake of that. Our Jared Buckley just highlighting some of the changes being priced into the market for what the Fed is going to do next. 1 week ago, about 36% probability that the Fed was going to finish raising rates in June. Now that probability is at 48%. So the likelihood that we could get a couple more increases from here is going up in the wake of this CPI report. But there's a long way to go from here to there.